You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributor to Backroom Technician. This week on The Biz, the Disability Insurance for Business series. And I got to tell you, the tribute to Disability Awareness Month from May 2013. And our show today, Retirement and Disability, with DI expert Dan Steenerson.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome to the Business Insurance Zone, and I'm your host, Steve Savant. We are broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain, and I'm stumbling over the thought of retirement and disability in the same sentence. It's going to drive the Google Analytics crazy with that statement. And with me today to talk about all this, because I think this is another revolutionary thinking in penetrating businesses and people that you would never get in front of, to talk about indemnifying your actual retirement. All that's DI Dan himself, Dan Steenerson. Dan, retirement, I'm sorry, this really, when I was introduced to it, when she talked about this last week, Marcy did, she just touched on it a bit. I can't think of anything that people are more concerned about right now. Every blog, and I'm not kidding you, every blog, the major blogosphere, the tweets, everything's all on retirement. I've been doing my retirement inspirement tweets like crazy. Why? Because everybody's concerned about it. We're going to be living longer. We got to put more money away. Everybody's concerned about the retirement. Now we're talking about, I can hardly make myself think about this. We're talking about insuring our retirement against a disability. I'm sorry, have I been asleep at the wheel? How long has this been going on?
Well, Steve, the fact of the matter is that your producers need to understand that this is really an unforgotten or really an unknown sale that's out there. Yes, the retirement issues are at the forefront of thinking right now, but when it comes to disability, it's not just a personal plan, it's also taking a look at your retirement plan. If you're age 45 and you're disabled, at age 65, the next 20 years, you've lost the compounding effect because you've stopped contributions. This policy will continue contributions on their behalf.
Well, I'm just taken back by this because I'm thinking of, I just saw a SEP IRA, I think it was like 46 grand, put in, he puts in the max plus he's age 50, so actually it's more than that. He gets to bump it up because he's over 50, recapture the catch-up. So this guy's probably shelling, I'm going to say probably 50 grand worth of money every year, and he has a track record for this. Some carrier's going to indemnify that on a DI?
Absolutely, they will.
Talk about this. Tell
Sure.
me the mechanics.
Sure.
Let's do the one I just saw. The guy's 50 years old, male. He's probably going to retire at 65, and he's putting away the max to his SEP IRA. He's right around with his 50 years old and everything else. I think he's paying over 50 grand.
Yep, that's right, that's right. And so this policy will actually allow you to come in and provide $4,500 a month approximately to indemnify those contributions that are made to the retirement plan. It works very simply with a 90-day waiting period, and then it runs it out to retirement.
Okay, now, what was that price tag again, you thought?
You're talking somewhere around $3,000 for a 51-year-old.
Okay, so it's like about if I did my math right here, that's about a 6-7% to indemnify my 50 grand. Right? Is that correct? Am I playing that right?
Yep.
Okay, now that is separate from and this is the amazing part of this. That number that you just gave me has nothing to do with my traditional disability.
That's right.
Is it true? I have two policies. Because a lot of people say, I can't indemnify my entire income. Well, wait a minute. Does your entire income actually calculate and include your retirement funding? Because a lot of people would say yes, right?
Right.
I make this money and I take out of that money, I put that aside. Right. So I could get my DI individual separate, yes. And then, like in this guy's case, 50, he's putting 50 grand, he could indemnify that as well.
Right, that's absolutely right. And so you stack them on top of each other. And that's why I say it's really the forgotten sale that's out there, because most people don't understand that. The fact of the matter is that you may have a client that's already maxed out his coverage that he can actually receive from an insurance carrier. Maybe he has $30,000 or $20,000 or $25,000 a month in individual DI, but he wants more because he's uncomfortable. Well, how do you get him more? This is another way of being able to provide more coverage to that individual.
I'm thinking, since it's pathetic, the job we've done, honestly, we were not really selling DI. We need to start selling DI. I'm thinking that this could be another one of those ways, just like business overhead expense. That was weird. And then we're talking about loan indemnification. That was strange. Now we're talking about retirement, which is the #1 blog and article on the insurance and financial online blogs. To me, that might be a way because you'll get serious Google traffic off
I
that.
absolutely agree. I'm telling you, this is a ready-made market. People have their ears and their antennas up on this actual area.
Well, I'm thinking especially, and of course you said this is great because if you're capped out on your normal disability, now you can add this to it, and that doesn't count. That doesn't hurt it anything.
That's right.
But to me, let's say you didn't have any DI at all, and I was talking about retirement. Listen, I know a lot of people that sell term and invest the difference. No problem with that, right? No problem with that. So they're buying term and investing the difference. Okay, but if you die, then it self-funds your retirement. But the odds of dying on a term policy are so remote compared to the statistical odds of being disabled during your working time period, it seems like I would shift my thinking over to this side. I'm just thinking, wow, what if I made I'm disabled? It's bad enough that the market went down in 2008. I'm just thinking about that alone. But now I'm adding on this protection that if I ever was out and 90 days later, from that day going forward to 65,
yes,
I'm going to have my retirement funded. And people always ask me, what is a way to ensure my retirement? And you could go, I always say, well, just do annuities or whatever. But now I'm insuring the contribution. I'm not talking about the investment, right?
That's right.
I mean, this is the difference.
Where can you go to insure that contribution? There is nothing available in the industry that allows you to do that.
I think most people would be, I think most consumers, I don't want to speak for consumers. 18% of you watch my show, you're consumers, but I want you to write me on this. I'm curious. Don't you think out of all the things, why pay disability insurance for other issues? And there are legitimate reasons, don't get me wrong. But I think you would agree, retirement funding protection, that to me makes sense. Paycheck protection and funding my retirement protection, that's worth the money I'm going to have to shell out for DI. We'll be right back after the break. We're going to continue our discussion on retirement and disability insurance, part of the Disability Insurance Series with Dan Steenerson. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Dan Steenerson. And remember, you can order today's materials at thebiz.tv. And while you're out there, click on the background technician icon for a free 30-day free trial offer to access the best needs analysis and sales support when it comes to financial planning. And I use this. I'm using it in the show today. I use it every day. Been using it for 22 years for everything that I'm into. And many compliance officers are saluting the flag to backroom technician. I'm so glad. I'm tired of writing. I'll just put them on the hook. How's that? I like shifting liability. Remember, we've been talking about some tax issues. So before you move forward with anything you hear on our show, always consult your tax advisor. And if you're FINRA licensed, your broker-dealer compliance department. We're talking about retirement and DI in the same sentence, which blows my mind. It's all part of our DI series for this week with Dan Steenerson. But Dan, when we came back from the break, we were talking about retirement, how to indemnify it. And now you're talking about if I had a company, if I heard you correctly, I could have 10 people or more, I could do guaranteed issue on that issue alone. Is that correct?
Yeah, that is an underwriting feature that is available. The fact of the matter is that a lot of producers don't sell disability insurance because they feel that it's too complicated or that the underwriting is too difficult, and if they have a client that gets turned down, that's an embarrassing situation. However, The producers that really do a great job and write millions of dollars of disability insurance do it with what you've said, Steve, and that's guarantee issue coverage.
So I need 10.
10 would be a minimum.
And am I going in to the business owner under regular DI or the DI for retirement indemnification?
Well, now that's a great, I'm glad you asked that question because it's available to both scenarios.
Which one do you think is, if I'm a newbie in this, which is the easier to walk into and talk about?
Well, I think the retirement product is red hot right now. It's a wonderful door opener.
I think so too. I mean, I'm all over this concept. I heard it last week from Marcy. I'm thinking, wow, we're missing out on this. We need to play on that. When I'm looking at guaranteed issue for 10 or more, and I can walk in there and I say, you already have a 401k, it's already established, people are funding it. Hey, are you matching us? That includes the match too, does it not?
Absolutely.
Oh my gosh, I mean, why would I not do that? And what a retainer and recruiting element for new employees, that this is already embedded in there. Well, that is a huge issue, and that's why this whole idea of retirement, now I can do it on a group level, make the underwriting a lot easier, right? Because I got guaranteed issue.
Right.
That's going to go fast.
Right, and just to be clear here, when we say group issue, what we're talking about are individually underwritten policies under the guarantee issue program. So it's not a group policy altogether, but it's individual policies that are made up within the group of the business.
I love that, and I love to see a presentation on that, and I might have to have Dan come back, and we may have to pull that off and make a workshop on the Mondo pad on this, because that to me could be play. You know, before we go, we only have a couple more minutes left for the show. It's been a great week. You've really enlightened us on the business story. I want to circle back on something yesterday because it's just gnawing at me about this Own-Occ issue on business succession. Now, I thought I've heard you talk about this before, but I wanted to bring it back on the show just because I found it to be a little strange. I'm an Own-Occ, I'm in business succession, I'm not coming back to my business because I've been disabled. Now I'm not coming back to that business, but I'm going to go to another business.
That's right.
And you're saying that some of these carriers will cover, I left my business, I have my disability buyout, I'm done. But I go over to another one and they're still going to pay under Own-Occ.
Sure.
Talk about that. I'm sorry, but that is strange.
That is very strange, and it's I'm thankful that provision is available under these policies. Now, when you take a look at the buy-sell, what you have here is a situation where people are always asking me, well, what's the definition? How do you define being disabled? Because you got such a long waiting period, 1 year, 18 months, or 2 years. Well, it's generally an own occupation definition, and more than likely that applicant, or excuse me, that claimant is going to stay out for a full year in order to trigger those benefits. But what happens is after 1 year, that individual says, you know what, I'm tired of sitting home watching the suds. I think that I can go out and I can do something. Well, if they go back to work in another business, a different business entity that they had the buy-sell in, they would still receive full benefits no matter how much money they'd receive in their new entity.
Dan, all this week we've been talking about things like business overhead expense, deductibility of DI in many circumstances. We've been talking about loan indemnification for institutions, which I think could be a way into banks. We've been talking about business succession planning and retirement, still the thing that's bothering me. But what we've talked about all this week is these are different formats to get in front of people. We're using them as market penetration tactics. To me, these are good business build-outs or good practice, positioning your practice in the community and distinguishing. With a couple minutes left, let's pitch DI for your practice. Now remember, a vast majority of my people are mortality. Yes. And remember, 18% are listening for consumers. So if you can strike a good chord between the two, give us your pitch.
Great. Well, I think first and foremost, you need to understand that BOE, business overhead expense policies, are only sold 15% of the time. 15% of all DI sales are attributed to business overhead expense. That right there is a good opportunity to go after the business marketplace. As I've said before, it's good daytime activity, and you're talking about to a principal that's willing to write the big checks in order for him to protect his company. So business overhead expense is always a good lead in the marketplace.
But by the way, that stat just surprised me. Only 15%. So even the people that are selling DI aren't really addressing this.
They're missing it.
Wow, that's a huge thing. What's
Absolutely.
your next thing? Because I like business overhead. That's odd. What about this? We've been talking about loan. I mean, that kind of was strange a couple of days ago. We talked about that. What's a pitch about that? I get the bank thing. I want to go into the business. Give me a few before we have to get out of here.
Well, what I think on the loan indemnity is that, a great market for that is going to be the dental marketplace and the physician marketplace. Those fellows, those professions are always looking for loans, either for acquisition or for buying additional equipment.
Thank you, Dan, for being on all
My
this
pleasure.
week. DI Dan with Business DI Insurance in retirement. Remember, you can watch all our shows this week, and I recommend it. Go out to our website, thebiz.tv, and remember, you can follow me on Twitter, Facebook, LinkedIn, Pinterest, and Google+. Well, that's the Buzz on the Biz for today. You've been in the zone, the Business Insurance Zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.